All right. Yeah. Good morning, good afternoon, good evening, depending on your location and the time that you get to be watching this video. So I think a few days back, um, yeah, that should be about the last 2 3 days. I actually made a promise to you guys to suck on this particular entry model that I took last 2 or 3 days. Yep. So of which I did. I discovered that I made a video without voice, right? So I had to come up with another video basically explaining this particular entry model that I took um, on gold. Yep, on gold. So um, without any further ado, let's jump into this. Yep. So I have something prepared already for you guys over here. So this particular entry model for me, it's actually what I called the type C entry model, and it works. Yep. um the gist is that uh, you guys should actually take your time after getting access to this information from me to backtest on um, peers or asset of your choice, and you see the win rate for this particular entry model. I'll be giving you about 6 criteria that I look out for in this entry model, right? So this is actually the um, textbook diagram and view of this particular entry model, right? I told you that I um, call this entry model the type C entry model, right? And calling it the type C, naming it the type C entry model, that actually means there is what we call the type A, the type B. Yeah. And in that view, you should know that the possibility of holding actually goes in that manner basically. So today the promise was actually on the type C entry model, which is this particular entry model of which I'll be talking about now. So I believe you have your jotters and your pen with you already to note down everything, right? So we would all agree that before we talked about entry models, um, market structure should actually be in place already, right? That is, that means you should have determined your market structure, whether the market is buying or selling. You know the structure of the market. You've identified your higher lows, the structures of the market, whether market is giving you an uptrend or a downtrend market, or the market is ranging. That will actually determine what you will be doing. So market structure is actually foundation in technical analysis, right? So let's just jump into this entry model. So talking about this entry model, you will actually see that I labeled each of the parts already for you guys, right? And here are the things I look out for, and here are the criteria I actually listed beside um, this for you guys to actually see. So when um, the first thing I actually determined whenever I jump on the chart is actually the trend of the market. I want to be sure. I want to be sure that the market is buying, or the market is selling, or the market is ranging. So I want to know whether it's the sellers that are in control of the market or the buyers. That will actually determine what I will be looking out for in the market. Probably I'll be positioned for a buy or a sell, and that's when I'll be looking out for my entry models after determining the trend of the market, right? That does not actually mean that probably the market is giving us higher lows, higher lows, and you see something like this for a sell and you jumped on it. The market could actually take you out, right? The trend of the market is actually important, right? So you want to be sure of the trend of the market before you jumped on the market. So the first thing we actually look out for is that the first criteria we look out for is actually the trends of the market. You want to determine the trends of the market. You want to be sure that market is actually buying and you are looking for buys, and you spot your entry model in that manner, right? So after determining the trend of the market, I spot this particular entry model, and this is my point of interest. This is my point of interest, as you can see. So that point of interest, right, it must um one, being in line with the market structure. We actually talked about that already. The second um thing you want to look out for is that that leg must actually break structure. I can see we have a break of structure for this particular type entry model. There must be a break of structure. It's actually non-negotiable. It's not something you negotiate. The break of structure actually further confirms to us that the market is still bullish. It actually confirms probably it's a downtrend that to spot something like this when it breaks structure to the when markets actually break structure to the down part. When that leg broke structure, it really confirms to you that the market is still bearish, right? So that's actually the meaning of break of structure. It actually further confirms to you that no, the market is still active in that direction, that the market is still much more active buying or active selling, as the case may be. So you want to spot that break of structure. The break of structure is actually non-negotiable. So the third thing you are looking out for is your liquidity. Liquidity is money, and you want to see money being taken out before you place your buy or your sell position. If you don't see liquidity, then you are the liquidity. Yeah, that's it. You don't want market to actually trick you, and you can see that here is my liquidity here. So you want to spot that's your liquidity, right? So liquidity or inducement. Inducement is actually a type of liquidity too. We have different type of liquidity. You want to see either um, of the liquidity, any of the liquidity, probably double bottom, double top, um, you know, trend line, um, any of them, any of the liquidity you want to see them over there, right, above your entry or below your entry, as the case may be, in respect to the um, market you are trading on. So you want to spot your liquidity. And now talking about the inducement. Inducement is actually an English word which actually means to deceive, deceiving early buyer. Some people will actually place a buy to here expecting price to buy from this low. Yeah, and you can see, you will actually be wondering, why did I name this break of structure and this break of structures. On my post I was actually explaining what internals and external is. So in this particular setup that we have, this break of structure is actually internal break of structure, why this is the overall the external break of structure for this leg actually initiated um, this move, right? And for that leg, it broke structure the same way this actually broke structure. If you notice that the external leg did not give us any liquidity, but then that internal actually provided that liquidity for us. So this actually serves our liquidity. It actually gave us that liquidity for this point of interest, right? And you can see that price actually came and it started buying. So that is actually the idea behind that. And also, for that point of interest you are interested in, you want to be sure, you actually want to be sure that the that leg you want to be sure that that leg is actually up to the 50% is within the 50% price leg. When you are buying, probably you are buying an asset, pair, something like that, you want to be sure that that's your point of interest is in the discount. You want to be sure that your point of interest is actually in the discount. You can see that we are buying, you should be buying within this 50% price leg, right? Your your point of interest should be within this price leg. For this price leg, it should actually be between this 50% price leg. This actually suggests that you are buying low and you are selling high, right? You don't want to be buying from this premium. When you are buying low, you are selling high, and when you are selling, it's expected that you sell high. You place your position here and you take your profit over here. So that's how you make profit from the forex market. And also, so the same thing applicable to the bearish market. It's just like an inverse of everything I'm seeing related to this bullish market, because the chart example I'm about to explain to you guys is actually for a buy position. So it's actually like an inverse of this buy position. So the fifth criteria on the list is actually imbalance. Imbalances or fair value gap. So when we are talking about imbalances, right, when we are talking about imbalances, right, is actually when is actually an instance when price is actually the forex market is actually created in a way that buyers and sellers are meant to have equal opportunities in the market, right? When the market is buying, it is expected that the buy and the red candle should be moving, should be actually moving sideways, right? It's not expected that the market should be like all this impulse movement. You will notice that anytime that news happened in the market, there will always be correction in the market. Market will always bring about correction. That is what is currently happening to the BTC market, right? And you will notice that most of the time that there is on impulse movement on gold, there's always some corrections in the market up to 50% price leg of that movement, right, to bring about balance to the market. What is currently happening to BTC, right? People actually notice, I think BTC started the movement from, is that 20k? From 20k, we actually see BTC above $120,000, right? Some people started buying from that $120,000, and now BTC actually dumped, and most of them actually lost their positions due to that, right? I believe that for most of the forex traders would not actually be surprised about the movement of BTC, because it is expected that price will always bring about corrections in the market, and after the correction it started the movement back. So that is what is actually currently happening in the crypto market, which most crypto traders are actually frustrated, but it is expected, and that will actually lead to the movement. So basically, so fair value gap, you want to see fair value gap imbalances within, near that your point of interest. This is our point of interest, yeah, this point is our point of interest, right? This is the point of interest. So you want to see that impulse movement, right? Buys, you want to see that imbalances, because imbalances, fair value gap in the market is like magnet that attracts price to itself. It attracts price to itself, and we always believe that it will actually attract price to itself to fill up the imbalances and start buying right? It's actually part of the criteria we look out for. And actually the sixth criteria is actually of liquidity sweep of liquidity. Now sweep of liquidity is actually the same thing with side by liquidity. Yeah, side by liquidity. And when we're talking about sweep of liquidity, you know, when we are in an uptrend, we have something that we call the protected low in an uptrend, right? When market is actually giving us something like this, market is giving us something like this, so like that, we don't want to see price takes out this low. We don't want to see price takes out this low. This low are protected low. So in a situation whereby price actually comes, take out that low, right? Break that structure, takes out that low. This was actually a strong low, which has been taken out by price. So if this met your criteria, this actually becomes a sweep of liquidity, right? Price took it out, use it as liquidity, it became a sweep of liquidity or buy side liquidity for this point of interest. So sweep of liquidities are actually former strong lows or former strong highs, basically. So that's actually the meaning of sweep of liquidity. So I believe this actually explained all of that. So without um, let's jump on the chart. Let's check all these things out on the chart. All right. So can use the understanding of everything I explained on the um, textbook diagram of this particular entry model. You can import that on the chart now, and you can see this is actually how you follow up on the chart. You can see the narrative of how price actually started. Price mitigate this point of interest, you can see that, and it started going, and also price actually did some of his stops over there, and you see after giving me the kind of view and what I called my entry model, right? So I was actually interested in this point of interest. I was interested in this. I took this order block, right? I believe you guys understand what order block is. A bullish order block is actually the last sales candle before the impulse buy. The last sales candle that leads to the buy. So that's actually a bullish order block, and you can see that actually happened. Here is my order block, and you can see that block broke structure, break of structure. We have a inducement over here, right? The internal break of structure, you see that over there, the internal break of structure, and these strong lows serve as liquidity for us, right? If we don't have this sweep of liquidities, there's something they called order flow, right? You can see the continuous mitigations of price action. You can see that from here, this breaker block, price mitigates this point, price came back to this point, right? Mitigate the mitigations. So we might actually overlook the sweep of liquidity because we have these mitigations, right? So we are not talking about order flow here. So basically, and you can see that over there, uh, giving us our inducement, which serve as a liquidity. You can see that over there, a break of structure, sweep of liquidity. You can see, let's see, the fair value gap at that point of interest. They are just buys. You can see that, and price came and it bought and it gave us our TP. So this is actually this about this particular type C entry model. So this is actually how you guys get the best out of this thing. You back test it on your favorite PS assets, for synthetic trader, crypto traders. You check it out on your assets, that's your trade. You want to backtest the win rate and see if this is something that actually works for you on your distance, and you want to add to your strategy. So do way to subscribe to this channel, Jamie Timothy. Do way to follow me on Facebook, um, Timothy Ogunjumi. Do way to follow me on X, Ignited Forex, and on Instagram, Ignited Forex. So for more um, you know more technical analysis, explanations, detailed explanations like this, and share this channel to your friends, trader friends that are struggling. We need some clarifications on some terminologies and strategies. You are welcome.